The future of the cryptocurrency market is being built right now before our eyes, and Chainlink is positioned directly at the center of this crypto evolution. So in today's video, I'm going to discuss what is it that drives the demand for the Chainlink token, and why is it that the price has been stagnant dating all the way back to May of 2022. So we're going to look at what are the demand drivers for the Link token as an asset. Why is it that we see a lot of other currencies go on these large runs while Chainlink consistently appears to be stuck in the mud? And I think there's a very good reason for this. I'm going to talk to you about that today. So if you guys are new here, what we do on this channel is data-driven analysis of the cryptocurrency markets. So if you've been wondering where Chainlink is at right now, where it could be going, and what you should be doing as an investor, you could head over to our new site, polaritydigital.io. We've just released this. It has all of our risk metrics for Bitcoin, all of the top altcoins. We also offer a complete price tracking data service here, which you would expect to find on something like CoinGecko or CoinMarketCap. In addition to all of that, our weekly research report that we put out, which goes into the macroeconomic picture. We investigate the cryptocurrency market. We discuss where we're at right now, what's happening, what's driving the price, and what we expect based on what the data are telling us. This is all available for free at polaritydigital.io. So with that said, guys, let's jump into it. So as I said in my Twitter post, what I'm going to be doing is building a model for evaluating where the price of Chainlink should be at any given time. And this will help us to understand what is the price of Chainlink and how does this relate to what the market influences are telling us the price should be. So we're going to do this by first understanding what it is that influences the price of Chainlink. Now, before we do that, we need to understand what exactly is Chainlink and how does the token work. And why is it that it's so different than the vast majority, in fact, almost all other cryptocurrencies in the entire asset class? So the basic level of understanding you have to have is that what Chainlink does is provides data services to applications in the cryptocurrency market. So this could be a wide range of different types of data that it provides. But the easiest to understand would be something like providing price information to the DeFi space. So if a DeFi protocol needs accurate, reliable price information, it's going to go to Chainlink and say, we need this price data, and we need it to be accurate, and we need it to be reliable, and it needs to be delivered in a timely manner. So Chainlink uses data service providers that work together in order to verify that price information is accurate, reliable, and fast. They then sell that information to the data requester, which in this case is the DeFi space. They take that information and put it up as the price feed. So what we can essentially say is that Chainlink is providing the entire backbone of the DeFi space. And that's one of the key components to what Chainlink does. So when you see price information in the DeFi space, you're seeing very likely data services provided by Chainlink. Now, what is Chainlink getting out of this? Well, these DeFi networks need to pay for that data in Chainlink. So they pay the data service providers fees. The fees are paid in Chainlink. The other source of demand that we find for the Chainlink token is actually from the data service providers. They have to demonstrate that they have a stake in the network. So we have two primary at the moment, and there are some others that we can briefly get into, but they're kind of beyond the scope of this discussion as far as what we're doing today. But we have two major drivers of demand for this asset. A, they're going to be data service requesters and then data service providers. Notice what I didn't say there. The retail market is not a demander of the Chainlink token. So it's very unique in that sense, in that the majority of the demand for the Chainlink token does not come from the retail market. So the retail market tends to be very speculative. They come in at certain points into the market, they drive prices up to exorbitant levels, and then they leave just as quickly. Now, because of that, indirectly, they are influencing the price of Chainlink. However, they are not the direct demanders of the Chainlink token. And that's very unique because a lot of other assets, things like Ethereum, things like the Matic token, a lot of your various layer ones where you're using that token to pay fees, you're not actually, as a retail investor, you do have the ability to stake Chainlink, but that's about it. You, as a retail investor, typically don't have the opportunity to use the Chainlink token in any way. And so all of the demand coming for the Chainlink token is coming primarily from those two different layers that I just discussed. So with that said, now that we have a very basic understanding of how the demand for Chainlink works, we can begin to understand the model that we're going to build. Now, this is going to be a two-part video. In the first part, we're going to lay out all of the different metrics that we will be looking at in order to derive a coherent model, which will help us understand that when one of these moving parts changes, how does it impact the price of Chainlink? And it will help us to understand whether the asset is currently overvalued, undervalued, or if it's in fact right where it should be. Because as we showed in our recent Bitcoin video, which I'll leave a link to in the description below, we find that a lot of people are saying that, oh, Bitcoin's so undervalued right now, or it's so overvalued. The data is actually telling us that Bitcoin is very appropriately priced at the moment based on all of the macroeconomic factors that we've investigated, based on all the network factors, the Bitcoin network factors. Bitcoin tends to be very appropriately valued at the moment. Now, there have been times when it's overvalued. Shortly after those times, we've seen major price crashes. There have been times when it's majorly undervalued. And what has happened when it's undervalued? We've seen in short order a huge price run. By looking at this data and diving into the numbers, we can find a lot of information that oftentimes eludes the average investor. Okay, so the first thing I want to talk about when we're discussing this model is kind of what is the best way to think about it. And maybe it's not the best way, but it's how I think about investing. And it's actually this approach that I apply to all of my cryptocurrency analysis. I start from a top-down approach. And when I say top-down, what do I mean by that? Well, think about the economy, think about investing, think about the stock market, think about the crypto market, and then think about an individual asset. At the top, we have the treasury market. We have the global economy. We have currencies, all of this. That is the top layer. If the top layer is bearish or bullish, it's very likely that you're going to get a trickle-down effect into the rest of these layers. Back in November of 2021, for instance, the Fed was starting to walk back their comments that inflation is transitory, and the fact that they're perhaps now discussing raising interest rates going into 2022. On my channel, because I use this top-down approach and I'm hearing the Fed say that they're very likely going to be raising interest rates, which is in effect going to really have an impact on risk markets, I'm starting to take a bearish tone. A lot of people don't like this because a lot of the bigger YouTube channels are out there telling you that no, we're going down to 50K, we're going to bounce off of that, and then we're off on our way to 75K up to 100K. But using a simple top-down approach, you could understand that when inflation is building up and when the Fed is going to start raising interest rates, that's going to have an impact into all of these other layers. So we have the global economy. Below that, we have the stock market. Below that, we have the cryptocurrency market. And notice that each one of these is getting smaller in a stepwise fashion. And then below that, what do we have? We have an individual asset. In this case, we're analyzing Chainlink. So let's say that we're in the middle of April of 2022 and great, amazing news is coming out for Chainlink. Well, what's coming out for the crypto market? Because that's the layer above. We need to think about a layer above when we're looking at these as investments. And if the layer above is looking very bearish, if the information coming out of the layer above is bearish, it's very likely that that is going to supersede everything that you find in the layer below. So if the global economy is looking bearish, everything is very likely going to be bearish. If the stock market is looking bearish, you're probably going to see that trickle down into the crypto market, and therefore that's going to trickle down into the individual assets, in this case, Link. A lot of people get confused because very bullish information comes out and they think that their asset, because this information sounds great, it sounds amazing, why isn't it rallying? Well, it's because you're not looking at the top-down approach. By simply thinking in these terms, you can drastically improve your thought process as an investor in the crypto market. Because so many times I hear people, huge channels talking about this information that sounds bullish, but really it may be bullish in the long term, but in the short to medium term, it doesn't really matter because nothing is going to experience a sustained rally when the layers above it are looking bearish. So even if positive news comes out about the crypto market, but the stock market is tanking, the crypto market is going to tank. You have to look one layer above. If it's bearish, everything else below it is going to be bearish as well. So that's just a very simple layout of how to kind of think about the markets as an investor. And it's how we're going to build our model today. Okay, so keeping with the top-down approach, and we said that you need to start at the top in order to understand everything below it. So we're going to start by looking at the US Treasury market. We're going to look at the US 2-year yield. You know, it's very difficult to kind of model the entire global economy. So we're going to attempt to understand the highest level of this top-down approach by looking at the most liquid market in the world, the US Treasury market. With this, we see that as the US Treasury yield falls, we're witnessing a large increase in the price of Chainlink. Then what happens? As soon as the US Treasury yields start to increase, we see a huge decrease in the price. So from there, what we can do is come down to the next level. So there's a well-known relationship between the stock market and the crypto market. So you don't need to be a data scientist to understand the fact that the NASDAQ is highly related to the price of this asset. You can see that when the stock market is doing well, when this index is doing well, Chainlink has been performing exceedingly well. When Chainlink is performing poorly, well, not coincidentally, we see that at the same times, the NASDAQ is performing very poorly. And, you know, if you just look at this here, you can see that these are almost mirror images of one another. These markets are highly correlated with one another, but it's obviously the NASDAQ that is having an outsized effect on Chainlink and not the other way around. The NASDAQ is a huge index encompassing all of the largest companies in the United States, and Chainlink is an asset with a $3 billion market cap. Okay, so understanding this relationship all goes towards what we were mentioning before with the top-down approach. You have to understand what's happening at the highest levels in order to understand what's happening at the lowest levels. If I just hid the price of Chainlink, I don't care if it came out on April 22nd. CCIP is released and it's the greatest thing that's ever happened in the cryptocurrency market. It's very likely that the price of Chainlink is still, it might go up some, but you know, intuitively you would think, hey, that's the most bullish news I've ever heard in my life, and Chainlink's probably trading at $100. It's very likely that it wouldn't be, because this top-down approach dictates that you have to respect what's happening at the top of the pyramid before that bullish news that you're hearing at the bottom of the pyramid has any effect. Because, you know, in the long run, yes, it very likely will have a positive effect down the road. In the short to midterm, it's very likely not going to have a very large effect if you're seeing something like this, where the NASDAQ index is just continuing to fall. So you need to understand what's happening at those higher levels. And that's the point I'm trying to get across here. So the next metric we're going to look at is actually one of the most interesting. And as far as the top-down approach, we're now at the cryptocurrency market. So this metric is, in my opinion, the most related in terms of direct market demand influencers. So what do we mean by that? Well, this is the DeFi total value locked metric. And before you ask, I had to create a script in order to get this data onto TradingView. So I cannot upload it and give it to you because it won't update automatically. And, you know, it's not going to be of any value to kind of give it out like that. So what this is showing us is the single factor that drives the most demand for Link itself. So the top-down approach has many indirect routes that all take us to the demand for Chainlink. The DeFi total value locked is essentially the direct demand driver. Because remember, what is the entire reason for Link's existence? It's to provide data services. And who is the biggest data service requester? It's going to be price feeds for the DeFi space. When you need more price information, when you have higher number of users requesting more data, then you're going to need more Link in order to meet that data demand. So I want you to take note of something here. So we're going to go back here to 2018. Chainlink has achieved a market cap. So we have the market cap over on the right of around 500 million. Very respectable, a nice price run, right? Coming from 40 million up to around 450 million. So a 10x return. So what happened? The bear market came. Everything, all of these speculative assets took a huge hit. What was the total value locked at that time when Chainlink had a $450 million market cap? Okay, it was zero. So there was no total value locked, or at least no functional total value locked, nothing of note. So Chainlink was completely a speculative asset at this point. But what happens later in 2019? Well, all of a sudden, the DeFi market goes from essentially zero to having, out of nowhere, $250 million total value locked. Out of nowhere, in the beginning of 2019, we achieve a total value locked in the DeFi space of $250 million, and we need Chainlink. Total value locked increases. All of a sudden, we need Chainlink, and shortly thereafter, Chainlink goes up nearly 3,000%. Okay, achieving a market cap of around 1.6 billion. So that was huge, but it made sense. And why is that? It's because the total value locked in the DeFi space was growing, and people were able to see that, hey, we need Chainlink. It has a function. We need this token. And so what did it do? It continued. You'll notice that it kind of leveled off right here, in fact, from the middle of 2019 all the way through till about here in 2020, we were hitting this resistance level right here, right at a $1.6 billion market cap. And why is that? It's because total value locked really wasn't going anywhere. So the price went on a huge run, going from down here where we were at around 60 million up to 1.6 billion. And we kind of leveled off until total value locked in the DeFi space took off, and notice how it was sort of a front runner. So the total value locked took off, and then the Chainlink price took off. So total value locked is essentially a proxy for the demand for Chainlink. So as this is increasing, you're very likely going to see an increase in the demand for Chainlink in order to provide that data service. But this is important. And, I think this is something that a lot of people are going to miss here. It's not a perfect measure. And why is that? So notice right here, and this is highly important. Notice that our price peaked up here. This is when we got to around $55. The market cap is on the right here. We had a market cap of around 22, 23 billion. And then we saw the price not really do much all through the remainder of 2021, even when a lot of things went on to new all-time highs. Why is that? Well, total value locked was continuing to increase. So you might be thinking right now, why is this? This makes no sense. I'm not sure you're right about this. Well, what was the one feature the market was missing in the second bull run when Bitcoin went up to 69K, Ethereum went up to nearly 5K, Solana went up to 250 or 270, whatever it was. What was the market missing? And when you dive into the numbers, the number of active addresses at that time, at that second bull run, so this point here from July up to November, was much lower. What did we say is the demand driver, the true demand driver for Link? It's not necessarily total value locked. That is a very good proxy for it, but it's actually the number of users, because the more users you have going on looking at the DeFi prices, the more data you're going to need to provide to those investors. And so the number of investors are actually going to be the true demand driver. The total value locked is a proxy for the number of total investors. But as we see right here, it's not a perfect metric. It's not a perfect metric because we actually hit our market participant peak back here in April and May, but we set a lot of new all-time highs. And even in the DeFi space, we set a new all-time high, reaching a total value locked of up to around 240 million or 240 billion at that time. And since that time, that has fallen off and so have the active addresses. And I think we're starting to build a coherent picture now to help you understand what is influencing the price of Link. It's not the retail market selling it. It's not Chainlink Labs dumping Chainlink onto the market. It's none of this stuff. It's the fact that we are seeing a massive drop in the total value locked, 74% drop, and total value locked, as we said, is a proxy for the number of people participating in the market. And if the number of people participating in the market is decreased, your total value locked is going to decrease. You're going to see that there's less demand for these DeFi protocols, and you're going to see then that the price of Chainlink is going to suffer because the number of people in this space is directly influential on the price of Chainlink. So the question then becomes, can we estimate that in any way? And can we represent that in any way that makes logical sense and shows us how many participants in the market are there? And there's no perfect way, because ultimately we don't have user information for every single asset that exists out there. But what we can do is look at the two largest assets, because those are going to essentially tell us what is a good estimate of the total number of active addresses. Bitcoin and Ethereum, just look at their dominance. They're going to be around 65% of the total cryptocurrency market. And so it stands to reason then that a huge number of investors likely participating in the crypto space also on some level are participating in the Ethereum and the Bitcoin networks. So what we're going to do then is something interesting. We're going to overlay the price of Link now. And what you see right away is almost a perfect explanation of what's been happening. And you're maybe starting to understand how a model can start to explain for us where the price may be overvalued or undervalued, because I want to draw your attention to something critical here. So notice at this point right here, what happens? The total value locked continues to rise, but the active addresses plummets. Notice that Chainlink does not necessarily undergo that same type of crash, but it doesn't go on to set new all-time highs. So, even though this total number may have been dropping, a lot of these people may have been new to the crypto market and therefore may have not been actively involved in the DeFi space in the first place. So many of these people that were still around, even though this number is falling, this total number is falling down to around 1.5 million. Many of those people were likely still involved in the DeFi space. And so it wasn't a complete wash for Link because there was still demand. It just wasn't enough to drive the price up to these higher levels. So we're starting to now see the model can look at all of this information and it can tell us what is the actual contribution from each of these factors. And it can do things that we simply can't do. We don't have the ability to calculate in our heads, if NASDAQ goes up 500 points today and the total value locked goes down from 60 billion to 59 billion, but the number of active addresses goes up to 1.3 million. We can't do that. But a model, using a machine learning algorithm model, we can do that. We can extract that information. So these are going to be the primary components. After we get past these, then we start to look at things that are down at the bottom layer. So now we're starting to look at factors that are directly related to Link. So let's take a quick look at those. Okay, so here we have the number of Link active addresses. And now you're starting to get a good understanding for why we saw this continuous drop in the price all through this bear market. It's because of the fact that as the price is continuing to fall, it's been accompanied by less users of Link. And it all goes to what we said. These users of Link aren't falling off because Link is becoming less popular. We're seeing less users of Link because, quite simply, there's less need for the Link token right now. And so that's resulting in this drop in active addresses. We saw a move when staking went live where a lot of people mobilized their Link, but this is kind of an anomaly because we know a lot of those people already had Link and they were just moving it from one place to another in order to stake it. So until realistically, and this is one of the perfect things of what I'm talking about, this was a bullish event, quote unquote a bullish event, but top-down theory tells us because the other things are not in line yet for Link, it's very likely that the price just isn't going to be able to go up to those new levels. I understand this was a long video and we kind of talked about a lot of topics, but what we're going to do in the next video is bring all of this information together. And I'm excited to show you guys this because we will actually be able to understand how all of these metrics in concert with one another influence the price of Link. And we'll be able to actually get an assessment for where the model believes the price should be based on everything that's happening right now. Just by eyeballing the data, you know, I'm not going to say this definitively, but by eyeballing the data, I suspect that Chainlink right now is approximately where its appropriate value should be based on everything we're seeing, because a lot of the metrics have, you know, went to parabolic levels back here in 2021, but you'll notice that a lot of the key metrics that directly influence Link topped out right around here in March, April, and May of 2021. And since then, other than total value locked, which has come down, you know, everything else has kind of followed right along with Chainlink's price, right as we would expect. So when you're saying that Chainlink, you know, it's being influenced by XYZ, it's really not. It's influenced by a top-down model. There is no, you know, secret hand out there suppressing the price. The price is being suppressed by other factors that are so much bigger than the cryptocurrency market. So you have all of these factors in the pyramid that are all putting price pressure on Chainlink and putting its price where it's at a market cap of around $3.7 billion and a Link price of around $7.20 or so USD. I hope you guys enjoyed this one. The case for what we're saying here makes a lot of sense. And I think if you just really look into the data, you'll see that there's so much more going on than the basic level, you know, what people are going to tell you is influencing the price. There's so much more to it than that. And so within a week or so, we'll be putting out the next video and we'll talk about the model and how you can better understand the value of Link and where we are at in relation to where the model thinks we should be. So that's going to be it for this one, guys. Until next time, as usual, see you.